Good morning.
Good morning.
We're getting together this morning to go over the report that I wrote on Monday. It's really related to what's taking place in Texas right now with Hurricane Harvey. It's going to have some profound effects on natural gas. It's also going to have profound effects, obviously, on gasoline and crude oil. But what we want to focus in on today is natural gas because it's correlated to the cost of electricity also, which we're largely involved with our clients. Now, Hurricane Harvey is unprecedented, and our prayers need to be with the folks there. This is unlike anyone has ever seen in the history of our country. This flooding is unprecedented, and because of that, we really don't fully understand what the effects are going to be, short-term and longer-term. There's some struggles going on. I believe it'll turn out that the effects will decrease production, and because of the decrease in production, it will be surpassing the decrease in demand. And I'm going to cover that, and it'll end up with a net decrease in supplies, which will support pricing. So in the report, I go through why I believe the hurricane is going to support prices short term, but especially long term. Short term, it's not as clear, but I think long term it is. This is going to be supportive to pricing. Now, put this in context. In the report I wrote last month, I talked about the fact that the market was going through a consolidation pattern. Consolidation patterns precede volatility, and I felt that the risk was much greater to the upside than the downside. It could go down, but I thought the downside risk was really small. The floor should be maybe $2.50, and I discussed the reasons for that. At that time, we were trading right where we are right now, just under $3. So the downside reward potential for waiting, hoping for lower pricing, was pretty small. The upside risk is substantial. Okay. Now, part of the reasons for that support that was there below the market was due to structural imbalances, and I'll touch on that a little more in this discussion. Now, in this report, I'm talking about what are the factors that are going to support pricing right here. Why do I believe pricing is going to be going up? And I talked about supply-demand. Pricing is based on supply-demand factors. Now, the demand right now is diminished short-term. Why? Anyone tell me?
There's less demand in that hurricane area.
Yeah. I mean, you're not using a lot of power if you have no electricity. Yeah. If your home is flooded, if the businesses are flooded, business is not thriving right now in that area. So there's lower demand in that area, okay? Directly associated to the flooding. And now the flooding is extensive, but it doesn't cover the whole Southeast, okay? So keep that in mind. And that is also being exacerbated as far as the limitations on demand. Then once this storm passes through, typically there's going to be cool weather that'll follow it. So it looks like right now the forecast for the next couple of weeks in the southern part of the United States, up into the Midwest and the East Coast, is going to be cooler than normal. That's also going to be affecting demand short term. So it's not clear to me that the pricing will necessarily move immediately. There could be a little more downside exploring to see if we can go a little lower. And it's just going to give the big hedgers an opportunity to build their big positions before we go into the winter. And I believe the pricing is going to go higher this winter. Okay? Because once this cool weather passes, once homes start to have power back to normal, there's a problem that's longer term, and that's the shut-ins of all of the wells, the natural gas wells. Keep in mind, Texas produces about 25% of the natural gas throughout the United States. And there's some estimates that this could decrease production in the area of 3 billion cubic feet a day. That's huge, okay? And it could take weeks, if not months, to get all of these wells back online. Now, this is regional. So it's not just the wells that are shut down, which is in that area, but they also have distribution networks that go out into other areas where it's being used throughout the Southeast, and in some cases even in the Midwest. So that's having a greater effect on the supplies because it's a regional effect. Understand? Demand more local, The effects as far as suppliers are going to be more regional. So when you look at that, it looks like right now we're going to have a decrease in production. The net is going to be greater than the decrease in demand when you're going out weeks into months. And we're going to end the injection season at a lower level than we would have otherwise. Now, in previous reports, I've been talking about we've had a structural imbalance. And that structural imbalance was already leading us to believe we were going to end the injection season this year below the 5-year moving average. That was one reason why I felt the floor was 250 at best for a price movement to the downside. If we had real mild weather, if the market had a reason to go down short term, it would be well supported. After I wrote that July 27th report, we had some mild weather. The market broke out of the consolidation pattern briefly for 5 trading days. Immediately went right back in. Now it's consolidating even in a tighter range. This leads me to believe that we are setting up for a big move. It could be delayed for another few weeks while we have this mild weather, but I believe it's going to be resolved to the upside. So this is the emphasis that I'm placing right now to my clients and encouraging you to also, when you talk to your clients, have them read the report. Let them know that short term, the market may pull back short term. It may because of this mild weather, but it may not because the traders long term may see that the time is getting short. And as soon as they see that weather patterns are changing and we're going to get back to normal weather with that decrease in production due to the shut-ins of the wells, this market, I believe, is going to start to take off. Any questions?